not be humble, quite frankly. You gotta brag. You gotta think that you're the best. You gotta know that you're the best. So I wanna state that as like if any startup is looking to go into an accelerator program, it's really what you'll get out what you make of it. It's sort of my.
Good evening, everyone. Thank you for joining us again for the 9JP New York Ecosystem Webinar Series. Over the past three sessions, we have been building a step-by-step understanding of how Japanese startups and universities can engage with the New York innovation ecosystem. In our first webinar, we explored Japan's global innovation strategy and the role of university with Mr. Morota from Kyoto University. In the second session, we learned about the mindset required to succeed in New York from a venture investor's perspective through RAT. And in our third webinar, we focused on the practical question of how to actually enter and engage with the New York City ecosystem with the insight from New York City DC. Today, we take the next step. Question is, once you enter the New York ecosystem, how do you actually build, grow, and scale your presence? To explore this, we are very pleased to welcome Elan Fox from SOSA, an organization that has been actively supporting the international startups as they enter and scale New York through accelerator programs and global partnerships. In today's session, we will first hear an overview of SOSA and its role in the ecosystem, and then move into a panel discussion where we will explore how international startups, including those from Japan, can move beyond entry and achieve real traction in the US market. All right, Elan, thank you for coming. And first, would you mind introduce yourself a little bit?
Absolutely. Thank you for having me. This is a great opportunity. A little bit about myself. My name is Elan. I'm the accelerator manager at SOSA. Briefly, SOSA is an international accelerator, consultancy, and VC firm all in one. I manage our accelerator programs in New York, where we focus on US expansion for foreign startups. And we're really blessed to work with so many different international cohorts. I would say between 8 to 12 cohorts per year. About 60 startups globally come through our doors every single year from Asia, Europe, Canada, Latin America. So it's really an interesting place to be, to see all of the different approaches of how to tackle the US market. We've seen a lot of what works. We've seen a lot of what doesn't work, both pipeline of clients in business development, in partnership development, in fundraising. So very, very happy to be here, talk a little bit about what we've seen in the market and how startups can best expand into the US market.
Right, thank you. Now please go ahead and make a presentation.
Well, hello, everyone. Pleasure to be speaking with you all today. My name is Elan. I'm the accelerator manager at SOSA, and I'm going to talk a little bit about who we are as an organization and how we support international startups to expand into the US market through our programs. So as a company, we've been around for about 12 years. We have offices in New York, in Brazil, in Tel Aviv, and run an innovation center in Singapore. We are proud to work with many governmental clients, primarily in supporting their startups internationalize into the US market, which I'll talk a lot about in just a minute. We also work with many corporates on innovation strategy, design, and execution, which I'll also double click on in a minute. And we're really honored to have such a global presence of both access to different ecosystems as well as different hubs where we operate, international landing pads, and ecosystem development programs. So as a company, really, we're structured as a consultancy. Our consulting arm works with innovation teams and business units at many different corporations, most of whom fall into two main buckets. We have many in the heavy industry and manufacturing industry, That includes HP, Schneider Electric, energy companies, chemical production, cosmetics, the list goes on, mining, paper and pulp. And we really help them find best fit technology solutions and create those matches whenever possible. We also work with many banking and financial insurance companies, many of whom are actually in East Asia. We have two from Japan, Tokyo Marine, MSNAD, that we've had relationships with for many years. And same here, we try to make those matches with technology providers and either create scouting frameworks or even POC management, really create the best matchmaking opportunities for those corporates to get access to the best fit technologies that will mitigate risk, that will reduce OPEX, that will open new markets for them with new products. It's really wide-ranging what format we engage with in our corporate partnerships. And then the third row here talks about our government clients with whom we partner with for those US expansion accelerator programs. A little bit about our consulting practice. We have 6 main offerings. Really popular right now is the POC management. As you can imagine, that's a very in-depth engagement whereby SOSA's consulting team works directly with the business units at different corporates and ensures that the integration between the tech provider, whether it's a startup or whether it's a software house, will produce the results that the corporate partner is looking for. But we also do things like manage their deal flow. We do opportunity mapping. So that's a whole department we have, is working directly with corporates on these consulting projects. And then really because of that arm that we have, we're able to get real-time insight into the demand for technology from the corporate, from the enterprise level, both here in the United States as well as globally from corporates in Asia, in Latin America, in Europe. And that positions SOSA as sort of a market maker. By understanding corporate demand for technology, we are then able to accurately assess startup readiness for international expansion and enterprise selling. And that leads us to the second part of our business, which is startup accelerator programs. And here we get into our accelerator operations here in New York City. We're very proud to now offer a whole suite of different programs for international startups looking to access the US market, both from the high level all the way to the very small mini programs. We really have something for everyone. So starting at the top, we have landing pads that are really long-term immersion programs for international startups who are very, very tested in their home markets, in their home regions, and now are really focused on selling enterprise level in the United States. We have our sort of medium-term accelerators. Those typically range between 2 to 6 month programs. Those are usually hybrid. What we'll do is usually several weeks of online preparation, and then that cohort comes from their country of origin to New York City, where we'll deliver an immersion program for them, connect them with investors, with corporate partners, and really teach them best practices for scaling in the United States. Then we have sort of mini programs that we call boot camp programs. Those are more for delegations that come into New York of startups where they're looking to explore the US market, and they're at sort of an initial stage of US expansion. So those are anywhere from 2 to 5 days typically. Those are all cohort-based programming, whether it's five startups in a cohort, 7, 10, even 20 startups. We've worked with a wide range of industries as well. We've run many programs that are specific to certain sectors, fintech, cybersecurity, AI, because of the New York landscape, tend to be the most competitive and the most desired cohorts that we work with industry-wise. But we've also worked with many in health tech, in even retail tech, in e-commerce, prop tech, space tech even. The list goes on and on. On the right here, you see a yellow box that's a little separate called the go-to-market and fundraising projects. I'll double click on that in just a minute, but that is working. That is when SOSA identifies a real high growth startup that is ready to take on a 5 to 6 month engagement directly with SOSA and work on sales and business development or fundraising and investor readiness in the US market. Instead of a cohort program, these are really specific and tailored to startups that engage in that project and work with us for a much longer period of time. And we invest considerable resources in making sure that they are creating tangible business opportunities throughout that almost half-year engagement with SOSA. So I'm going to double down on the landing pad opportunities. The reason for that is because we actually have 2 ongoing programs right now that might be very interesting for the Japanese market, for Japanese startups to expand into the United States market. One is a program called the International Landing Pad Network. That is a 12-month-long program that we have currently running with the NYC They're the New York City Economic Development Corporation. One of the directors of the NYCDC was previously on a webinar, and Sophie Marie. We work very, very closely with her on this project. This is a 1-year-long landing pad for 10 high-growth startups that SOSA is taking care of throughout the entire year, making investor introductions, corporate matchmaking, events. I'll go into the specifics. It is important to note that the applications for this program closed several months ago. We already have the 10 startups selected. Hopefully, we will run another edition next year that has yet to be determined, but we're very excited to show what a long-term program like this can do for international startups. There are 4 main pillars in the International Landing Pad. One is access to a dedicated launchpad of physical space in New York City. Number 2 is exclusive ecosystem integration, really becoming part of SOSA's network through a variety of approaches. Expert-led operational readiness, pairing all of the startups with mentors and industry experts, and then introductions to investors, including SOSA Ventures, our own VC fund. So the office space that we give all the 10 startups access to is actually SOSA's office. We have a beautiful and renovated office right in the center of Manhattan, very centrally located. All 10 startups get free access to that. There's a co-working space, conference rooms. Really, it's meant to be their home away from home. Number 2 is the ecosystem integration. We have many partners in the venture capital space, funds that engage year-round in the programs that we run. And with the International Landing Pad startups, the ones that are really ready and mature and expanding actively to the United States, venture capital firms are very interested in meeting those types of founders. Corporates as well, some of whom are already SOSA's corporate clients, but others who are corporates in the US tech ecosystem that want to engage with founders more generally. Industry experts. We also bring service providers who are experts in immigration law or tax accounting or how to hire for US teams as a foreign startup. So there's a lot of breadth that we provide here. Of course, mentors, all the startups in the program get access to a lead mentor who guides them throughout the program, building their business development action plan and really making sure that they're hitting their milestones in achieving their US expansion. So it's really shaping the way that they will expand into the US. And that lead mentor is someone who has either led a US expansion of a startup or a scale-up successfully in the past, or is an investor in those types of startups, or is an industry expert in really the space that the startup is operating in. So those matchings were selected very carefully. We also provide some scale-up services paid for by the program that the startups get access to, whether it's extra prep in pitching to investors or even like paid tax accounting. Those are some of the extra services that we provide in this program. And then, of course, access to investors, SOSA Ventures, as well as many curated introductions to New York City investors throughout the program. We launched the program back in March, so about a month ago at this point. We've already made more than a dozen direct introductions in addition to the sort of initial launch event, which many investors came to and met the startups at. So needless to say, lots going on here. Every startup in our 10 startup program in the International Landing Pad is in a different stage in their international expansion. Some of the founders have already moved to New York City. Other ones, the founders remained in Spain or in Canada or wherever they're coming from, but they come to New York City regularly every couple of months. Other ones have already hired a US sales lead, and so they're taking on the brunt of the responsibility of expanding to the US. So everyone's in a bit of a different situation, but the whole theme here is US expansion in a very dedicated, active 12-month-long program. Here's another one, and I want to grab everyone's attention because the applications for this program will likely open next week, if not in early May. And we will send the application link to hopefully everyone who listens to this, because we really want applications from the Japanese market for this one. This one is called New Jersey Base. It is a very similar structure in that it is a long-term landing pad. The timeline is a bit shorter. It's 6 months, and we're selecting up to 20 startups for this program. This is also in partnership with the New Jersey State Government Economic Development Authority, a very similar type of entity that wants to bring in foreign business to their geography. For those of you who don't know, New Jersey sits right next to New York City, and for this program is right on the waterfront, looking at Manhattan. So it's really a 10-minute public transit ride from downtown Manhattan. It was very strategically positioned, this physical space. And it's giving startups access both to the New York ecosystem, the broader New York metropolitan ecosystem, as well as many of the corporate industries that are quite big in New Jersey. I'll dive into those in just a second. But the main things to know about this program are that we are launching applications quite soon. It's going to be a 6-month-long landing pad. We are going to have multiple cohorts, so 6 months for the first cohort, and then once they're done, we're going to have open applications again, and then have another cohort begin. And we'll have overall 5 cohorts for this coming in over the course of 3 years. We hope to have 20 startups per cohort. And then here is an image of the building, the waterfront building where this is actually going to be housed. All startups that are selected for New Jersey Base get access to the entire workspace, which is an entire floor in this office building. And so there's both an open workspace as well as a dedicated office space. This is something unique, a dedicated office space for every company that is in this program. You see the one down left on the green, that's an example of the office space. We're putting in desktops, some more electronics. It's really like top tier corporate office quality access to office space here. So this is meant to be the home away from home for all of the 20 companies selected for New Jersey Base. I'm very excited to launch this. I will send the application form once it is open. You can also go to SOSA's website and search for New Jersey Base, or just type it into Google and you'll get this website. If you click I'm interested, you'll get a very short interest form that'll automatically be put into SOSA's database, and we'll reach out to you when applications open. In terms of what we're looking for in applicants, we are prioritizing startups and scale-ups that are approaching 1.5 to 2 million in revenue, US dollars. So it is for startups that have achieved a certain level of traction in their home countries or internationally. and who are ready to invest resources into a US expansion. We're willing to take it on a case-by-case basis. So, for example, deep tech startups that have raised significant capital but haven't yet sold or are initially selling, we will understand those cases. So my recommendation is always to apply and perhaps reach out to the SOSA team if you believe that you have a special case. But we're really looking for startups in a variety of different sectors. I should say the New Jersey state economy there is very strong in pharmaceuticals, in health, in financial, insurance, cybersecurity is very important to the state. Many other sectors, we have more listed out on our website, but if you have any questions about New Jersey base, would be happy to speak with anyone who might be thinking of applying. I want to touch briefly on the last sort of offering that SOSA has for international startups, which is the go-to-market or fundraising projects that we run. Based on all of our experience running international landing pads, accelerator programs, boot camps, in the past 2 years, we've really developed a new offering that works directly with high growth startups that perhaps have already done an accelerator program or are more mature and really are ready to invest in a heavier project and really invest their attention to the US market for a duration of time. We've developed this project to essentially de-risk the sales or the fundraising process for foreign startups in the US market. One option of this project adaptation is focusing on business development, go to market, whereby essentially the value proposition, if you will, is that SOSA acts as a fractional US sales development lead, and with the goal of course, generating deals and also market fit and validating assumptions for the US market, because we've seen a lot that startups will have assumptions about the US market and they'll have so much success at home and they'll have a whole playbook for go to market in their home region. And oftentimes they will assume that it will be replicable in the United States, but so often, unfortunately, that is not the case. But nonetheless, the US is a very rewarding market, so something is worth trying out. That's where SOSA really hopes to come in and be that local partner for startups that are looking to really commit to US business development for a certain amount of time and de-risk that with a local partner who's done this with hundreds of startups, who's worked with hundreds of startups in the accelerator programs over the past 5 to 6 years. So there's business development and then there's fundraising. With fundraising, it's essentially preparing for the fundraising process and then actually executing that, whereby SOSA represents the startup and engages with the US investment ecosystem. So essentially pitching to investors, bringing investors to the table, and then hopefully fundraising a significant deal for the startups that take part in that project. To give you all a sense of the timeline and what that looks like, both of these projects aim to be 6 months long. For the go-to-market projects, we're going to begin with deep market intelligence. That's really doing a deep dive into, of course, things like competitive landscape and perhaps pricing adaptations, but also really customer discovery and having really deep conversations with sort of friendly customers, perhaps design partners even. And then figuring out the go-to-market architecture, what route is best to take based on the market intelligence that SOSA conducts, whether it's a certain geography within the US that we should target together, or perhaps a different ICP than the initial assumption was, ICP, ideal customer profile. And then going into that 3-month, 4-month, really sales as a service campaign, whereby SOSA conducts outreach and lead generation with the broader US ecosystem, but within also the specific target market that we defined together in phase 2. So really going out into the market, representing the startup and bringing leads to the table, and then with the startup, help them conduct the whole negotiation process, the sort of qualification process, etc. With fundraising, it's a similar play-by-play. We'll do a lot of strategy work, really understand how much to raise, under what terms would be ideal, and then going into investor readiness, making sure your deck is properly constructed, that it meets all the expected criteria that investors really expect to see in investment decks. Data room is very important. Sometimes that needs to be updated. Sometimes it needs to be built out from scratch. Data room showing all of their financials, all of the documents, things like that. Then going to outreach with the investor network, both with our existing network as well as going above and beyond that. And then really bringing those investors in, having meetings, supporting the founder in negotiations, deal making, all of that process. So all in all, 6 months for both ones. I would say for startups that have attempted initial sales in the US, but perhaps didn't see any traction or have thought about investment, have thought about fundraising from the United States, but haven't gone too far into that process. But they have the resources to potentially go out and focus on the US market. This is a really fantastic opportunity to do so with an accelerator that has worked with startups from across the world and have successfully brought them into the US market. So if any of this is interesting to any of you, I'd be more than happy to hop on a conversation and walk you through the process. Again, all of these projects are very tailored to meet the industry and the target market that you are operating in and selling to, and supporting your goals in the United States.
Thank you very much for the insightful presentation. We just heard about the SOSA role in connecting international startups with the New York and the New Jersey ecosystem this time, and supporting their expansion into the US market. Now, as always the case, we want to move into the panel discussion by inviting our own Daiki Nakajima from JETRO. Question here is, how can startups move from entering the ecosystem to actually building and scaling their business in New York? So first, my question, SOSA has been around for 12 years. How have you think your experience working with the startups?
It's really been, first of all, from my perspective as an accelerator manager for the past 3 years, it's been an incredible experience to see the intent and really the passion that foreign entrepreneurs have when they want to expand to the United States market. It is the largest market. It is the highest reward. It is also the most competitive. And for that reason, it is so tough to enter without any local partners. And that's really where US expansion accelerators such as SOSA really come into play and do, I think, meaningful work for the startups that come through our doors. As I said, we usually work with government partners who are critical players in bringing their ecosystems to market in the US, in giving them that bridge. And so our work would not be here without the government players that we partner with for our programs. The startups, the founders really, when they come to our programs, are so bullish on US expansion, and it's been amazing to work with them and help them tweak their strategy in a couple of ways.
So I think JETRO first engaged with SOSA, I'm going to say about 2018-19. That was the first time we engaged with SOSA. You were in the previous building. We hosted a couple events there, I believe. Some startups came. But that wasn't me. That was somebody else at the time. Then post-COVID is, I believe, when we started engaging or re-engaging, I believe, when Patan was in the office, and that's when we initiated our Global Acceleration Hub program. And then we wanted to work more on the corporate innovation side, which obviously SOSA is your bread and butter. So it's nice to, over the years, get engaged and finally be at this point where, we potentially have maybe something in terms of synergy to create and co-create an ecosystem. So I think that's where I'm excited about. And the fact that you guys are very much engaged now with EDC and now the state of New Jersey or EDA, I think it's exciting to hear that. And and then as we at JETRO are heavily focused on bringing these Japanese startups here, I think that's it's a good mix, and it's exciting.
Right. So then you talked about the involvement from the like international governments. Like how have their approach been like evolving or like progressing over the years?
Yeah, it's so I actually come from an international affairs background, funny enough. So I almost like inadvertently am connecting that part with the business side and the startup side by doing this work with bringing in foreign trade organizations, trade agencies, export promotion agencies, trade commissions into the startup world. I admire a lot the trade commissions and the trade organizations and the many different ways that they're willing to structure their support packages for startups. We've seen many different shapes that the support packages take. Many countries want to run their US accelerator programs in-house.
Yeah.
And we see that done mostly from the Western European countries, France, Netherlands, the United Kingdom, though Germany, Denmark, it's and it makes sense to do it that way. We play in a side that is the countries that understand that U.S. expansion is such a local game, and it really requires a local network that really the reality is that is built from being in the ecosystem and being immersed here. And I think we're in a really good position as a U.S. accelerator has deep roots in the New York ecosystem to connect the dots and work as an external partner to these trade commissions and connect them with, I think, many investors, many corporate innovation leaders, many potential clients and partners that the startups would not otherwise meet in our programs. That's a huge part of what we try to bring to the table through matchmakings, through sort of speed dating activities, through demo days, really creating high value touch points between key decision makers and startup founders when they come into the market here in New York. That's really what we pride ourselves on, in addition, of course, to the mentorship aspect of the programs and all of those sort of other accelerator typical types of activities as well.
At the same time, like each country has a different approach, and then do you have any like advices to the Japanese government? Hey, like when you bring into the startups, you should take like this initiative in this manner. Like some initiatives are more successful than others, right? So do you have any advices on that side?
I think the Japanese government is one of the more mature and robust and very well structured in its support for startups to go abroad. I've seen the Japanese government, both from JETRO as well as other entities, focus on industry-specific programs, which is absolutely my recommendation. Really, across the board, we tell all of our government partners, please, put your resources into a sector-specific program. That way, we're able to work with 10 startups that are specifically targeting banks or specifically targeting CISOs, cybersecurity, or are only targeting, retailers, retail tech. So that will create a lot more value. And I've seen JETRO and other municipality governments do that from Japan. I think also the Japanese public entities are aware that the market changes and that market dynamics, they understand how to respond to market dynamics. So something we've discussed with JETRO is more of sort of the go-to-market project package and less of the classic cohort-based accelerator programs. That's something that we're seeing a lot in the market. Startups come to us requesting that type of go-to-market project without even a government sponsor. So I think that that's showing a willingness to adapt to the market, the way that JETRO sort of endorse that type of project.
No, I think that's a great initiative. As you know, and as we know, there's a lot of early stage startups. However, we have a lot of mid-stage startups as well. And in order for the mid-stage startups to be very successful in the US, New York specifically, you need traction, you need networks. Japan doesn't have that ecosystem yet. However, I believe that, what you've sort of sent us to, or you've mentioned to us, that, helping these companies build traction in New York, in the US, that's going to be important. And I believe they have a great program that can help not just JETRO startups, but many other startups that, are seeking additional fundings that are Series B, C, and D that require some sort of revenue stream in the US. So that's a great, and I think it's a hole that we're missing. There's an area that we don't have a lot of expertise. However, I believe by working with partners, it's an opportunity.
Well, that's a great segue to our topics, talking about just not just only about entering, but also to how to grow, how to scale up, right? So then during your presentation, you have various program with different lengths, right? But still, like first 6 months, 12 months are very important, right? So what are some of the mistakes like startups do? Like once they get into New York versus the successful one. We can talk about successful cases later, but first, what are the more mistakes?
Yeah, there are tons of myths that I think are very common. There's one that always is brought up in every program we run. Startups come into our program, they think that being more affordable, being a lower price point than their US competitors will help them get in the door with enterprise clients. And we have to tell them that 9 times out of 10, that is not the case. That is not the decision-making process that procurement teams at corporates go through. Their priority is value creation. And that's how they assess products. If a product creates value, and that value could be reducing cost, it could be mitigating risk that eventually will lead to a higher reward from entering a new market. It could be whatever related to cost. At the end of the day, everything comes down to money. But a big assumption that we see in our programs is that startups from markets where they typically price their product at a lower point think that they will have an easier time selling in the US if they continue that price strategy. And so that's one common mistake we see. Something else we see that is a bit more related to founder mentality and culture is the unexpected need to not be humble, quite frankly. You gotta brag. You gotta be, you gotta think that you're the best. You gotta know that you're the best. Be smart about it. No one wants to deal with a founder who is overly confident. But we see a lot with founders coming from Eastern Europe, as well as also I would say East Asia, with our experience with Korean startups, with Taiwanese startups, with Singaporean startups, as well, that they have to do some adaptations to their pitch style, to the way that they present themselves even online, even in the way that they talk about themselves on LinkedIn is a pretty big one that needs to adapt. So humility, I would coin it as that. Like humility really needs to change. You gotta brag about yourself, and you gotta claim that you are solving the pain points of your customers at the get-go, and not be shy about it. That's a big one.
What about the corporate side? So you guys have worked with corporates. What are some of the misconceptions from a corporate aspect when they're trying to, I guess, find partners or potentially create something so that they find that product, that love product, that right acquisition or partnership agreement. What do you see from foreign companies, or not the largest ones? They have a lot of presence here in the U.S. But those that want to step in and get into the market, they have the cash flow, they have a CVC arm, but they don't know what it's like in the U.S.
Yeah, corporates entering the U.S. market.
Yes.
That see, they definitely have more resources to do the due diligence and to do the testing. They may not necessarily need a local partner as much as startups do. Corporates, we think will underestimate the value of early stage startups really quickly. They'll see a lack of traction as like a big risk to take. Usually corporates will enter a new market. One of the strategies to enter a new market is to do so through an acquisition of a local player. So that's something that we advise them to do diligently. Like if you're assessing the market, to really understand who the players are, do due diligence. That's where consultancies can come in and do that due diligence ourselves. But understanding the market, the competitive landscape is essential. And then through that, picking the best player, either through an acquisition or some sort of a merger. That's usually how we've seen market access at the corporate level.
Yeah.
How are you? In your program, you have so many U.S. not only U.S. corporations as a partnership, but also many international corporate as a partner. What are their expectations working with you? Are they looking for specific type of services through startups, or they are looking for their service in general? How does your communication work?
Yeah, with corporates.
Yeah.
So with corporates, we work more on innovation advisory. That can be any sort of different offerings that we have. It can be any sort of tech scouting where they want to understand the market, they want to understand a new trend. So we'll do sort of a competitive analysis and oftentimes go a level deeper into doing validation, like in-depth validation and due diligence on potential players that they can either partner with to co-create a product or to acquire or to do a promotion of another sort of channel distribution together. That's a big one. We also do management of corporate venture capital funds. We do that for several of our Latin American and European clients. They essentially come to us looking for the best deal flow. Usually it's deal flow that is outside of their area of expertise. So we've seen, for example, energy companies coming to us looking for non-climate, non-energy related investment opportunities. Fintech, cybersecurity, AI obviously is a requirement. POC management, going 5 steps beyond the tech scouting, really managing the integration of a tech solution with the corporate and ensuring that comes out creating value on both ends. So anything within the innovation umbrella, we're very flexible in what we offer our corporate partners, but everything within innovation that creates value at the end of the day for their business units is really what we're capable of doing.
So the reason why I ask is for a CVC standpoint, if the technology is too close to the company, internal R&D team will complain about the outsiders, right? But if the technology is too far away from the core businesses, they don't care. So how?
Yeah, it's there's both. Yes, you're right in that it's when a corporate engages with a startup for a POC and a pilot, there might be a whole range of intentions behind it. And this is actually something we have learned through our corporate innovation advisory work that we've incorporated into our curriculum with startups through the accelerator programs, is to always beware, not in a malicious sense or anything, but to always listen to what is really being said in conversations with corporates and where the money really is, because there will be oftentimes where corporates want to engage with startups and create sort of a perception that they're cooperating, that they're looking to innovate. But in reality, after they learn a little bit about a product, after a few diligence calls, and they haven't signed anything, they're not beholden to any cooperation with the startup. But after they've learned a little bit about, a platform or something like that, then 6 months later, suddenly their R&D team has actually created a similar product. So there are instances like that. There are instances where, corporates want to do a POC but not pay for it. But it's such a big name that the startups go ahead and do it, and they make all these product iterations. It's a lot of time. It's a lot of R&D money. And then, sometimes the POC goes forward into a deal. Sometimes it doesn't. So there's a lot of preparation for the corporate engagement strategy that we work on with our startups, and being diligent, and also understanding who the decision maker is within a corporate tree is really crucial to understand at an early stage, and then guide the conversation accordingly, because you really only want to talk to the key decision makers at the end of the day.
And then, your corporate partners, are they the ones buying the services from your startups through procurement division, or because CBC and procurement are very different to the departments, right?
Yeah, sometimes, so the startups, the corporates that engage with the startup programs, usually the individuals come more from teams like innovation team or digital transformation team, or really good scenarios when there's really someone from the business unit. So there's a fintech program and someone from the payments technology research and development arm actually comes and engages. That's the real person that's evaluating a fintech startup if they were to sell to bank X. So people from the business units, people from the innovation teams, the corporate venture capital arms, we've seen them sit a little separately from the rest of the corporate. They sort of act as their own independent fund within, sort of an independent team that is acting as a fund, but they also don't have to fundraise because they're investing off of the balance sheet. Within the VC community, there's a joke that they're living the high life because they don't have to go fundraise, but they're also deploying the same amount of money. So the corporate venture capital teams tend to sit a little separately, but they're still within the general framework of the corporate, for sure.
Right. Yeah. So then, you do yourself have a VC arm as well. So can you talk about a little bit about that too?
Absolutely. Yeah. So SOSA Ventures, it's our. So we have a corporate consulting arm, we have a startup accelerator arm, and we have a VC arm. Yeah. SOSA Ventures launched about 1.5 years ago. We are a smaller fund. We are investing primarily in pre-seed, seed, and Series A rounds, between 500K to 1.5 million check sizes, mostly into defense tech, sort of national resilience as we call it. That's our main focus. We're also, we've made investments into industrial companies, and we're looking at that as well. Also, cybersecurity is a focus of ours, sort of adjacent verticals to the broader defense tech world. But yeah, we made 4 investments so far, looking to deploy more. And, ideal scenario is to invest in startups that have graduated from our startup accelerator programs. It's very much something we want to do more in 2026 and 2027. But yeah, SOSA Ventures is its entity in and of itself, investing globally, no geography limitations. And we have partners also that we co-invest with.
Oh.
Yeah, so
just out of curiosity, so you have been running the business for 12 years. Why now? About
Yeah.
1.5 years ago, but like,
Yeah.
why now?
Yeah, so SOSA more broadly has gone through a few adaptations of its own business model, I will say. 12 years ago, way back when, we were founded as sort of like a co-working space in Tel Aviv that started sort of taking on like an events management, and then we started to run programs, then we ran corporate programs. Over the years, we've adapted. 2018, we opened our New York City office. Actually, 2017, I believe it was 2017. We opened our New York office. 2018, we ran a big program here in New York called the Global Cyber Center. That was actually an NYCDC project. I think that's probably when we first engaged with JETRO. Yeah. So ever since then, we've been very engaged in the New York ecosystem. But only sort of since then did we really start to run both corporate innovation projects and startup accelerator programs for foreign startups. And I will say, that definitely took a dip in the pandemic. Yeah. And then after the pandemic, it increased even more so. So really in our current stage, in our current form, SOSA has really been running sort of these US accelerator programs for, I would say, 6 years. The corporate consulting projects for a bit longer than that. But the thesis for the fund, for SOSA Ventures, is to hopefully engage in the startup, in sort of act on the matchmaking that we do in our corporate consulting world and in our startup accelerator world, and invest in those deals and those market signals that perhaps the outer world isn't seeing, because SOSA made those matches happen.
Yeah.
Since our consulting work and our accelerator work has evolved, that's how our thesis got developed of, hey, let's facilitate this growth even further between our corporate partners and the startups and put money into it.
Yeah. All right. And bring back to the story to the startup side. Like, could you talk a little bit about the successful stories with some of your startups? Like, what are they? And we talked about the mistakes like many startups do, but what made the successful ones?
Yeah, absolutely. So startups that engage in our programs, that have gone through SOSA's programs and done so successfully and really achieved meaningful outcomes out of the programs, I think are ones that the founder has the right mindset of taking opportunities wherever they come from. We've seen startups come out of our programs with commercial deals, with term sheets, not immediately after the program, but in the months and years following them, who have really taken every opportunity to meet people that we've brought to the table in the programs, and have followed up with them, have been diligent with them, and that see every opportunity to meet someone as an evolution to a potential deal or to a potential investment round. What startups who have the best feedback about our programs say are that we brought the right people to the table. But the magic is that we bring similar profiles really to every program. And I would argue that it's much more about the founder's mentality of leveraging every opportunity that is made available to them in the programs. So I wanna state that as like, if any startup is looking to go into an accelerator program, it's really what you'll get out what you make of it is sort of my motto here.
Do they know the term word called like work-life balance, or like they should forget about it? How does that work? Like for the first 6 months for the startup coming to New York?
Yeah.
Party, or what?
A little bit about. We joke how in New York we work hard, we work very hard, and we play hard.
Okay.
And I think that, I've spent some time in San Francisco. I think San Francisco, the mentality there is to work really hard. And the play hard is,
Hell yeah, they don't have, they can't walk out right outside.
Right.
These places, so,
Yeah.
No, I think work hard, play hard is support.
That's a big one.
Uh,
Yeah. And the networking aspect even is
Yeah.
it's very important.
speaks for itself.
Yeah. So then from like a day one to like a 6 months later, how do you feel the growth of the startup through your program?
Mhm.
What kind of change do you see into the CEO? Like even will they how will the team be consistent after the introduction of your network?
Yeah.
Like 80% of a new team or like 20% new team or
Mhm.
how should CEOs think about?
What we tell our founders is to always focus at the initial stage of an expansion. 70% of your time should be focused on go-to-market. Business development, sales, everything else will come afterwards.
Okay.
Fundraising from investors, hiring en masse a new team, office space, all of that stuff doesn't come unless you have clear product market fit and clients are purchasing your product in the US.
But normally they don't know about what the ideal market is to begin with, right?
Correct, and that's where a local partner can come in. I mean, also startups can do their own due diligence. Like it's really not hard to do market research today with Perplexity, with Claude. SOSA's team uses that in our consulting practices. Every consultancy does. So market research can be done. I think at least at an initial stage independently. Customer discovery is a crucial part of that initial expansion stage. That can be a bit more difficult as an independent startup. That's certainly where local third parties like SOSA, who also have a consulting team, effectively do customer discovery, since we're sort of a neutral player in the startup buyer and third party triangle. So that's where I think like our added value could come in. But customer discovery is also something that a competent founder who is eager on building a network can easily also do themselves. Customer discovery is essential, and getting that first client in the first 6 months is a goal that we set for all of our startups. Because once you get that first client and you go through the whole compliance process with them, they've validated you, suddenly their competitors will see that you've secured them as a client, and they'll see that, okay, you've gone through the whole process of they've done their due diligence for you, they've trusted you, so maybe it's not that bad of an idea, maybe it's not that much of a risk if we do so ourselves. So getting that first client is really, really tough, and after that, it's much, much easier.
Yeah, but if you think about the BD funnel, knowing the client versus getting the contact is very far away, right? So how do you recommend the startup CEO to approach them? Like, should they make a cold call 100 times a day, or go through your more how do you say your trusted contact trusted network partners? Or how does that work?
Yeah. There are many ways to do GTM, and this is, you're asking the $1 million question. Like every startup is trying to crack GTM. Because the reality is that the product is not the moat anymore.
Right.
Anyone can code. With all these tools now. So marketing, GTM, that's from an investor standpoint, that's very much what they're most interested in, is when a startup has an amazing product, fantastic. What's your moat? What's your moat in terms of your GTM? Will your business development approach compound on itself? Will your network extend beyond what you initially have in your pipeline? GTM is absolutely essential. When doing business development in the US, we always recommend startups to do several approaches. One, of course, cold outreach, emails. It's just a hard cold outreach. LinkedIn messages can sometimes work depending on the ICP, depending on the target market. But there are many AI tools that are fantastic now that will automate email outreach to your ICP, to your target buyer. That'll tweak the message, that'll do so, that'll automate emails at the right time. Fantastic tools. I won't go into them too much, but those are the ones that we recommend for our startups to use all the time. Another one that I think foreign startups oftentimes underestimate is personal branding, self-promotion of the founder, of the co-founder, perhaps also the VP of sales.
Yeah.
Personal elevation and thought leadership, if you will, goes very far in the United States. Buyers want to see that the leaders of the product know what they're talking about, that they're well respected, that they're speaking on panels, that they're showing up at industry conferences, that they're promoting themselves as a leader in the space. And I think that part is really tough for foreign founders to really get on board with. It could be the language barrier, it could also be the mentality and self-promotion. We've heard from the founders that in their respective ecosystems, it's not good to brand yourself as the leading product or to promote yourself as like an industry leader too much, because that's just the cultural norm. But here in the US, it's very much part of being seen as a premier product is also the actual self-promotion of the identities leading that product.
Yeah, you mentioned about Asian startups need to forget about humbleness. Do you have any comment on that?
I absolutely agree.
It's a tough one.
No, I think it's you can be humble. It's just you have to know when to take that opportunity. It's very important, and it's different compared to how you take that opportunity in Japan versus how you see it, how I may see an opportunity in the US. When I'm talking to Japanese companies, or if I need to, for instance, sell a product in Japan, which not in my seat right now, I don't have to do any of that. But past experience running my own companies, I think there's different approaches that you have to take, but you definitely have to time it, or you have to sort of be able to balance and know yourself first, know how you brand yourself first, and then take that approach forward, because people may appreciate you for who you are. People may appreciate you in Japan for the product that you may have. So it takes a bit, but I think in order to do that, I think like Elan said, you just have to meet people, approach people, cold call, just fail, see where you're messing up and where your selling point is weak, whether your branding is weak. And I think you just have to build upon that. And I think that's the importance for a foreign startup.
Yeah, branding is essential.
It's very essential, especially in New York. You're one of many in the city that's trying to sell themselves, and you have to compete against them, which is very hard. If
foreign startups are able to crack sort of the self-promotion minefield, right? Because they're also, there's self-promotion that is not effective, and that can err too much into the personal, which you are elevating you as a person, you are self-promoting yourself, but we also have seen founders use LinkedIn, for example, as like almost like a diary, and to talk a bit too much about their personal life can just, that'll distract people away from what's really important, which is the value of your product. What value are you bringing to your clients at the end of the day? Promote yourself as a leader within that realm, but it's
at the end of its product.
Exactly.
Yes. So then, it sounds like your program provide a lot of benefit to the foreign startup, especially they don't, to begin with, they need to adjust themselves to the New York, U.S. culture, New York culture, and then they need to adjust their selling point as well. So just as in the first 3 months, 6 months is beginning, how much time is allocated for them to think about themselves versus follow your guidance? How does the time allocation work? Is it 20/80, 80/20, or how do you think about it?
We definitely put some time in our programs. Well, because each of our programs also is a different timeline. Some are very short, some are very long. We definitely do put curriculum into our programs that'll get the startups thinking about what self-iterations they can do within their own branding, their own go-to-market strategy. What we're trying to do is to take that 6 to 12 month process of expanding to the US and hopefully make it shorter into a 3, 4, 5 month process. All of our startup programs very much try to immerse them as much as possible in New York, create as many connections for them in New York, and we beg them when they exit the programs, please maintain these connections, because even if you're not ready to invest, like $150K over the next year in investing in US expansion, which will require flights on your behalf, maybe hiring a fractional sales lead initially, all industry conference tickets, all of the things that are required to do a US expansion. We really tell them to focus on first assessing the US market, understand if it's worth that time and that investment, and that SOSA will always be here beyond your program to be your home away from home physically, but also be a resource in creating connections after your program is done.
How do you see the growth or evolution of some of your startups you have seen after your program? How do you communicate with them, and how do you see their growth?
Just before this, I ended a call with one of our Canadian fintech startups who is doing very well. A lot of it is me reaching out to them 6 months after, 12 months after, 2 years after, doing a personal check-in with them, understanding what the status of their company is, how best we can help, reminding them that we have the space in New York. If they're ever in town, please come to our office, utilize our space. We've engaged in more formal partnerships with our startup accelerator alumni who need sort of a physical, like an official legal headquarters in New York, and we've acted as their headquarter space. We've introduced them to investors, we've introduced them to corporates, many of whom are corporate clients. We've seen a good number of success cases, primarily in AI. Anyone who was applying AI in last year's programs, the year before, now is doing much, much better because of the development of their AI tools. We've seen investment rounds being raised out of startups that we've introduced to investors. We've seen top 5 banks close deals with startups from our programs. Seen them speak at industry conferences and become the thought leaders that they said that they were going to be. So it's an amazing way to keep up with the startups after our programs through our alumni network.
Yes.
And also through reunions that we do as well. Those are always great.
Any questions from you?
If I had, let's see, if I had a question, kind of tough, I guess. This is throwing a curveball.
Go for it.
So, and you mentioned a little bit of this before in one of your answers, but a lot of times, language barrier is a huge thing, right? In Japan, obviously, it's even bigger. There's just been a struggle. How do you cope with some other countries, right? And sometimes there could be other countries that struggle with language barriers. How do you see them fixing that solution, finding that language?
That's it's a tough one, but it's super.
It's crucial.
It's relevant.
It's so crucial to how you sell yourself.
Sure.
Because I think, you don't necessarily need to have perfect English to be able to sell yourself.
No, you don't.
You don't have to. However, there's got to be not a trick, but a way to do it. And I'm always curious to know because, everybody has different accents, right? Sometimes it's easier to listen to it. Sometimes it's harder. So it's always something that from an accelerator, from a mentor's perspective, like how do you figure that out? How do you find them a way? Because they might have a great product.
Yeah.
They can
communicate the value of it. It's lost. That's a great question. And we do see the difference also between different ecosystems that we work with. Spanish founders from Spain have a much different time than founders from Slovakia, who have a different time communicating than founders from Korea or Japan. Canada, we also work with Canada, obviously. There's no issue there. Actually, not always. There were a few Quebecois founders who...
Sometimes.
I would say their English is better in Madrid than in Quebec. No, I'm kidding. But no, this is a tough one. And so on sort of really the linguistic part, we do sometimes bring a speech therapist who specializes in accent reduction. And she's delivered individualized sessions to founders in our programs, whether they're from Eastern Europe or East Asia or elsewhere. She's pretty skilled in common ways to reduce accents and pronunciation. So she does a great job, and that's something that we've done a lot in the past. We also do a general pitch practice routine in all of our programs, whether they're 2-day programs or 1-year programs, pitching and practicing the pitching, both with SOSA's team, with each other, with experts, give them feedback. That's like a requirement in every single one of our programs. I think outside of the programmatic sense, when a startup is selling to a US client and they're not from the US and they have an accent, we've seen many different approaches. Sometimes they will hire a fractional analyst, even an intern who is from the US, who is in the US, who has really good understanding of English. Sometimes they will have a connection to their home country, and they will sort of co-represent the startup along with the founder and support the founder with English on those client calls. We actually have a Korean startup in our International Landing Pad program who did exactly that. His English is difficult, and he brought to the program and to lead go-to-market in the US a Korean graduate student who lives in New York who speaks really amazing English, which is really from Korea. So that's a strategy. Another strategy, I think, is to hire a VP, like a fractional BDR or VP of sales to lead the US expansion initially. Again, ideally someone who has some sort of connection with the country of origin of the startup. And I've actually seen a few recommendations. We worked with one Czech gentleman, or his parents were Czech. He lives in Ohio. He does sales for Czech and Slovak and Polish startups in the US. And he said that he usually cracks a joke in the beginning of a sales call with when the founder from Slovakia or from the Czech Republic comes on and says something about their accent being similar to Dracula or a villain from a 1980s
I've never heard of
action movie. Something to break the ice. Right? Exactly. So that's also an approach. It's just break the ice, mention the elephant in the room. If it's your personality, if not, don't do it. So there's a bunch of different ways. I think bottom line though, what we tell our startups is, look, it's the US. It's New York also. It's a melting pot. Everyone is from somewhere else. And in every corporate innovation team, in every investment fund, you will find someone with an accent. You will find someone who had to fight for their visa to get here. You're not alone. Everyone is from somewhere else.
I mean, I say not to be an embarrassment, right? It's 200 plus languages.
Yes, in New York City.
And Sophie said last time. So it's not something to be embarrassed about. I want people to just go out, speak, right, and work on it because everybody has some sort of trouble, if not from
Sure.
So,
I think the perception is that the U.S. is a lot more xenophobic than it sometimes will seem from the outside,
Yeah.
especially in the corporate world, in the investment world. People are generally pretty accepting of foreign accents,
Yeah.
foreigners, much more than
Yeah.
I would say.
practice.
Yeah, in practice, absolutely.
That's it.
Work hard, play hard.
Yes.
All right, before concluding, do you have final advice to the startups, especially coming from Japan?
My recommendations are to really look for the best local partners, people who have worked with foreign startups. We're very excited to work with Japanese startups. Hopefully we can do so with JETRO, with other government entities, and directly as well. So if you are a foreign startup, if you are a startup from Japan looking to test the market in the US with a local partner, more than happy to speak to any one of you.
All right, great. Thank you so much for coming, Elan. As always, thank you for coming, Nakajima-san. So, as mentioned, today's session is all pretty much about how once you get into New York City, how to scale up, how to grow. So the key is adjust yourself and then work hard, play hard, as you said, and
Yes.
lead as many people as possible. All right, thank you so much.
Thank you.
All right,
Thank you.
Thank you.
Sure.
Thank you.
Thank you.